Hello traders, Carl FX. Most of you know me by that name. I'm the CEO and founder of Day Trading Tanzania. So today, first I'm going to start by saying my name. My name is Kenneth. I'm a day trader from Tanzania, but most of you know me by Carl FX. So you can address me in any way that you feel comfortable. Day Trading Tanzania was registered this year, this July. Number 458, 208 in the business celebrations. So in this video, I mainly want to speak of anatomy of a reversal while assessing the footprint charts or while performing order flow analysis. So it's just a simple video that I want to share with you. How do we know that price is going to make a turning point as we are approaching a certain area? So I know you probably have your areas of interest that you gladly think that price is going to reverse, maybe a major support, maybe a major resistance, trend line, view up, high of the day, low of the day. But I think that is not, but that is on my area of concentration as of today. So the first thing, I have my time and source window on the left, and I have my order flows footprint chart. As you see, this is on the 15 minutes chart. So mostly reversals seen on the 15-minute chart are probably more strong reversals than other reversals in small time frames. It doesn't mean that they're not valid, but it just means that these are more stronger than the ones in the lower time frames. So first thing that you need to be looking at in a reversal or an area where you are sure or you think, because most of the times we are not sure of what is going to happen, we think what is going to happen, then we validate it on the footprint chart and due to what we see is happening in the market at the current time. So the first thing you're going to be looking at is the decline in volume as you are approaching your area maybe of support or resistance, your area of interest. There are so many, so I won't name them. So you'll be looking at declining volume. What I mean by declining volume is for order flows traders, we assess volume by looking at the volume traded on the bid, for example, in each particular bar, and also because this information is too much to process, we use the bar totals on the downside here for us to know what was happening in each particular bar. So this bar tells us what has been going on all this time in the bars. So for us, we mainly want to see the decline in volume. That is, we'll be looking at the delta. We'll be looking at the delta to know if we are having less interested buyers or less interested sellers as we are approaching our area of interest. For example, for now, what the market is currently offering, we see we had price coming to the high of the day, and then price just falls or just goes in the other direction. So what we see here is we had very strong volumes going up, and as you see, we started from this candle here right above the view up. After the view up was broken, we saw sellers trying to plunge the market, but we get a good sequential decline, and then the market just continues to go upwards. So for example, for this particular trade setup right here, first, that's the first thing we want to see. We want to see the decline in volume. We see that from here we had very aggressive volumes. Here we have sellers trying to sell, but in the next bar we had less buyers. But from there, the next bar we had more buyers buying into the trade, and then after that we get a stop hunt, or we can say triggering of stops, because as you see, one side is dominated by too many zeros. Then in the next bar, price just falls off, almost coming to view up, and then reverses. So we'll be looking at delta all this time. We'll be looking at delta to see, are we really getting a decline in volume as we are approaching our high of the day. Also, we'll be looking at absolute values meaning what is being traded on the offer and the bid. So for me, this is so simple because I'll be just looking at the lots that are being traded, the last buying lots that are being traded, either going up or going down. This is for me to see if I'm going to get any order flows patterns, for me to see if anything, or understand if anything is happening in the market right now. So the first thing is you look for decline in volume. The second thing, you'll be looking for absorption. Are we in an area where buyers are being absorbed by the sellers? So for example, in this trade here, we come to an area where we had more buying, but later prices didn't go anywhere. But this is because this was a stop hunt. It was triggering of stops. This is why, because it is dominated by too many zeros, and it happened at the high of the day. But for a case where we had aggressive buying at the end of the move and we did not advance any further, it could be spotted as absorption. So let's try to see if we had any absorption at the low of the day today. So this is the low of the day. So cable has just been rising for the whole day, so we can say there was absorption really, because this is not very aggressive selling. It's just 69 lots sitting there at the low of the day. But a form of absorption, this is a form of absorption because we have aggressive buyers buying into the move even late. The last lot traded here was aggressive, but buyers just failed to continue to take prices upside. Then the move was just dominated by sellers pushing prices below. So that is the form of absorption. But we are speaking of anatomy of a reversal. So for us right now, we can see this is a form also for absorption, but we can't really judge it because this is forming on in an intrabar analysis. So we can't really say or make a conclusion here that we are going to have sellers to sell more unless this bar closes. So right now what we see is we had buyers buying late. We have 167, 105, and 108 contracts, so lots buying late into the move, and then price just stays there and reverses. But as I say, this is not yet confirmed until the bar closes. So what is happening, it means that these aggressive buyers, all these aggressive participants, are being absorbed by the passive buyers or passive participants. Those are the limit passive orders. that are absorbing these lots. So now the third and final thing that is mostly going to be the basis of your conclusion, because you really need to have confluences in your trade. The last and final thing you'll be looking at is the order flow patterns that are forming while you have been looking for price or expecting price to reverse on a prominent area of interest. So for instance, let's say for example, this is just a simple example. We are going to put this as our area of, okay, let's do one thing. Let's call this our area of support over here, because maybe we see that price was resisted here for a number of times. This was our initial high of the day. As we see here, this was created during the Asian session. So uh, coming into London session, this is London session, it broke out on this candle. So we can also see on the normal bar. Okay, let me just clear this. Let's just look on the normal bar 15-minute time frame as the one I have there. So this is the level. Okay, let me just draw a rectangle here. This is the level that we are currently speaking about. This is our prominent area of resistance created during Asian session. We are just going back and forth. So let me just clone it and let's label this area here. So we had our area just going back and forth, then it was just broken and price started trading above. Now this is our area. What I want us to see is, let's say we are going up, and the last time sellers came to retest this level, we get a good sequential decline. We get 102, 128 lots selling late into the move, and as you see, price is just declining, refusing to go or head into that direction at that current time. So this is our first signal. It could be our first signal for us to go long on that area. Another thing that I want you to look at is, I want you to see this candle. We had price falling down. It was probably a trending market. If we go to the 15 minutes, this market was trending. Then we have a new low created here, two lots traded at the new low. Then the delta is staying positive. It is a new low from the previous candle, but delta is positive and the bar is green. This we call a delta divergence. It is mostly strong when happening on a larger time frame, but even no, sorry, it is mostly strong when appearing on the high or lows of the day. But even here, it is applicable at times, and this was an order flows pattern for us to buy or sell. Also, looking below here from these two candles, we get climatic selling. This is our third part. So the third thing to look at now, we look at climatic selling or buying in that particular candlestick. So now we see climatic selling from the beta volume indicator here, showing that price could no longer continue to go downside. And just after this candle starts to be as a warning, in the next candle we see decrease in delta, and after that we see more buyers coming in. Also, we can just see how the view up line stays bullish from here when price is falling and just supports more upside, and this is what happened later. So right now I'm not having a lot of tools that are running right now, so because I only wanted to speak of the anatomy of a reversal. I'm not picking any trades right now, so this was just a short video for you guys to see how can you use the footprints to plot a candlestick reversal in a certain direction. So until next time guys, I hope this was helpful. You can subscribe to my channel for more. Also, if you need anything to be added, just leave a comment and we'll speak about it in the next video. Thank you. Until next time. Bye bye.